This is Cashflow Ninja, episode 102 with Jason Burack.
Welcome to the Cashflow Ninja, the podcast empowering and inspiring people to discover how to generate their own income and manage, grow, and protect their own wealth in the new economy. Now, here is your host, MC Laubscher.
Hello everyone, MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today, and I'm really excited to have on the show someone that is also extremely passionate about financial education and helping Main Street increase their financial IQ. I've been a very big fan of his and his company's work, and have followed them for a while. My guest is Jason Burack. Jason is an investor, entrepreneur, financial historian, and Austrian school economist and contrarian. Jason co-founded the startup investor education and financial education company Wall Street for Main Street to try and help the people of Main Street by teaching them the knowledge, skills, research methods, and investing expertise of Wall Street. Wall Street for Main Street is now transitioning into an educational technology company that will empower people to learn a practical, real-world, useful financial education at an affordable price using new virtual classroom software technology. He feels this will help make sure that people are better prepared to navigate through these difficult financial waters. Jason is a double major in history and political science from Virginia Tech and has read over 400 books on business, investing, entrepreneurship, and related subjects. My listeners will know that I too am extremely passionate about empowering people around the world to become self-reliant and reclaim their self-ownership and independence, so I'm honored to have Jason on the show today. Please share your feedback and thoughts with me on today's interview. You can let me know your thoughts by tweeting me on Twitter at MC Laubscher or by email at info@cashflowninja.com. And please remember to join our mailing list by signing up at cashflowninja.com or texting Cashflow Ninja, one word, all capitalized, to 44222. That's 2 4s and 3 2s. As some of my listeners may know, I live in Newtown, Pennsylvania, a town that's about 45 minutes away from Philadelphia, the birthplace of the United States, the home of the cheesesteak, the Rocky Steps, and also the hometown of the beloved founding father, Benjamin Franklin. Benjamin Franklin believed that investment in knowledge pays the best interest, and early to bed and early to rise makes a man healthy, wealthy, and wise. The Cashflow Ninja have aligned itself with partners that aims to empower you to be healthy, wealthy, and wise. Our healthy partner on it provides supplements, nutrient-dense and earth-grown foods, and fitness equipment to help you achieve your next level of well-being and total human optimization. Our listeners can get a 10% discount with coupon code GETONIT at cashflowninjahealth.com. Our Wealthy Partner Fundrise gives everyone the opportunity to invest directly in high-quality real estate without the middleman. Fundrise makes the process of investing in the highest quality commercial real estate from around the country simple, efficient, and transparent. You can get started with as little as $1,000, and you do not have to be an accredited investor to participate in some of their offerings. You can check them out at cashflowninjawealth.com. And don't forget our wise partner Audible. You can download any audiobook for free when you try Audible for 30 days. You can download your free audiobook at cashflowninjabook.com. Hello everyone, MC Laubscher here, and I want to personally invite you to a webinar that my friend Minesh Bindi from Gold and Silver for Life is hosting. 3 steps to cash flow gold and silver and create a passive income of 12% to 26.4% per year. With historically low gold and silver prices, there's never been a better time to invest your money in gold and silver, and with Minesh's unique strategy, you'll get a monthly cash flow while locking in huge profits and protecting your wealth. In this webinar, you will discover how to cash flow gold and silver at 12% to 26.4% per year, the 2 most profitable methods used by hedge funds to acquire gold and silver, how to collapse-proof your wealth and profit from the coming currency collapse, and how to retire without running out of money by positioning your wealth to grow 1.358% to 4.182% over the next 10 years with gold and silver. The financial education and strategies that Manesh shares in this free webinar is life-changing. You can register for this webinar now at cashflowyourgold.com. That's cashflowyourgold.com. Jason, welcome to the show.
I'm glad to be here. Congratulations on your success.
Thank you so much. Can you please share a little bit about your background and your journey with my listeners?
Sure. So I initially didn't have a business or investing or finance background. I had history in political science. I was also a law school dropout, and I did some in the MBA program a little bit too, although, I stopped liking the theories. They just didn't, I took accounting classes, took a few economics classes, a lot of them, these academic theories in business and economics from PhD Economist just didn't make sense to me. So I dropped out of there. This was a little bit before the 2008 financial crisis. I was a stockbroker without a business background. So basically those jobs, for your listeners who are not familiar dealing with stockbrokers, a lot of those guys in the past used to be a lot more knowledgeable. They used to think a lot more long-term about their clients. They used to not be as much just about sales and commissions. But really the business has changed a lot. And I was a stockbroker, like I said, prior to the 2008 crash, and I was also a stockbroker during the 2008 crash. And it was just a total disaster. I was trying to sell annuities, bond funds, stock funds during the crisis while everything was collapsing and no one wanted to buy any. And the brokerage firm I was at, had very low morals. They were trying to get me to sell these high commission products to my family and friends, or they were going to fire me. I interviewed at a bunch of other different stock brokerage firms, and I got pretty much the same song and dance from a lot of different stockbrokers. How, like, dude, this is a sales job. It's commission only. You have to sell whatever's on the piece of paper. If you know anything about stocks or wanting to teach your clients, this is not something that we do anymore. We outsource the stuff. So the industry was not what I had. I had just started reading, books about investing in the stock market then. My parents also inherited a good amount of money, at least a couple $100,000 at that time. And my grandparents had passed away. And unfortunately, when my grandparents had passed away, my grandma died after my grandfather, and my grandma had been suckered because she didn't have much of a financial education, and she had been suckered prior to 2008 into buying mortgage-backed securities, bad real estate investment trusts. I mean, pretty much any single bad investment you can think of, like bank stocks, pretty much all the toxic garbage that crashed in 2008, my grandmother had exposure to it. And so I was reading investment books during the crash. I was trying to help my dad clean up the investing portfolio that he had inherited. It had lost hundreds of thousands of dollars in a very short amount of time. We liquidated as quickly as we could. We took the losses, the tax losses, and I started researching. This was the time during the 2008 crash. I was seeing that the central banks, I was just starting to wake up and learn about Austrian school economics and what the central bankers were going to do. And then we started to buy, quality dividend stocks and growth stocks. I thought beer and buffalo wings and watching sports at Buffalo Wild Wings was pretty recession-proof. We were buying copper and iron ore mining stocks at the bottom in 2008, 2009, thinking the ones that survived. China announced that big stimulus program. We were buying bank stocks for a short amount of time as a trade. I don't, obviously like the banks. So while I was doing this, I was thinking, a lot of other people I was talking to didn't really understand what was going on with the financial crisis. I wasn't getting the answers I wanted when I was watching, CNBC and Bloomberg. They were pretty much just saying the mainstream media narrative, the Keynesian economics narrative, that, no one saw this financial crisis coming. The ones who did were totally lucky. I started reading a bunch of investing books on my own from a bunch of different authors. I started off with value investing books like Benjamin Graham and Warren Buffett and Peter Lynch. And then, I started learning. I found Peter Schiff's work, and I found Austrian school economics. And then I met Mo Dawood, who was introduced by a mutual friend of ours, and we both loved investing a lot. And we decided that we could start, Wall Street for Main Street, which was an investor education and financial education company. And we could start, writing investing articles and selling reports about well-researched investments and start interviewing other experts and get people to actually learn some useful financial education. So that really built my passion. I had been reading some investing books, starting in 2007 while I was in law school. And it was law school. Being a lawyer is pretty much a dead-end career for the most part in the United States now. There's just too many of them, and I wasn't passionate about it. So I found something I was passionate about. I was helping my parents. I helped them overcome a lot of investing losses, and I've been just pretty much going down that path now, trying to build up Wall Street from Main Street into a really good investor education and financial education company. And we're transitioning now to an educational technology company where, I've interviewed hundreds of different experts in many different fields of investment, where those people with virtual classroom software, hopefully in the near future, will be able to raise the money we need, and people will be able to go and learn all of the skills they need for business and investment, entrepreneurship, how to invest in stocks, how to invest in real estate, different types of stocks like value investing or technology from experts being taught in classes, how to learn different levels of accounting, whether it's basic financial statements like a balance sheet, statement of cash flow, income statement, or advanced hedge fund level accounting for shorting, that on a subscription model. So that's where we're transitioning to right now. It's taken a lot longer than I thought. It's been a long and difficult journey to get this far. But the podcast has grown a lot, very, very quickly in the last 2 years. MC, it's grown really tenfold in the last 2 years on YouTube. So I'm very impressed with that. And, we're starting to get advertisers now interested in booking advertising. We're speaking to investors about writing us checks. So, a couple years ago, it was very tough. I think there's always the burnout phase for an entrepreneur. The investment part of it, actually picking out investments, has been easier. I have read a bunch of entrepreneurship books, but, actually reading about them and learning from successes and failures of entrepreneurs is different than actually going and doing it and seeing, big deals blow up in your face, or a bunch of people not doing what they said they were going to do after weeks or months of negotiations and emails and conference calls and stuff like that. So it's been a long and difficult journey to get this far, but I think we've made really good progress in the last 2 years.
Yeah, you guys are doing fantastic stuff, and the financial education that you share and the value that you guys put out consistently is really something I would encourage all my listeners to take a look at. And I definitely enjoyed as you explained your journey, because I had some of the same experiences. When I read as much as I possibly can too on entrepreneurship and business and investing, and and then you get into it, and as you said, it's just there's just so many things that you experience firsthand that then the real learning starts, right? Jason, let's jump into the economy and markets. Now, we currently have markets at all-time highs. Donald Trump has just been elected as president with a Republican majority in the House and the Senate. There seems to be some confidence increasing in the United States and in markets. And this is all obviously on the surface. What is your view currently of the economy and the markets in the U.S. and globally?
The real economy in the U.S. is not doing that well, except for a few industries. The technology industry, for the most part, is doing very, very well. The shale oil industry was doing well for a while after 2008. There's been a huge credit bubble in there. It hasn't blown up yet. I thought there was going to be a lot more bankruptcies in the shale oil boom. That has actually delayed any economic collapse by the U.S. because there was such an enormous amount of jobs created and oil revenue, but it was done on artificially cheap debt. And to the credit of the shale oil entrepreneur, they've actually managed to be able to cut costs a lot faster than anyone, including myself, has been expecting them to. So, shale oil, when it came online, oil was around $90, $100 a barrel. So it became economic then. And then when oil dropped to 65, a lot of people, including myself, were proven wrong. We thought a lot of shale oil producers would go bust. They managed to be able to cut costs and survive for a bunch of different reasons. One of which was the Federal Reserve told the banks not to call in the loans. But they have been able to cut costs and actually still generate some cash flow. They're kind of treading water right now, but a lot of them haven't gone bankrupt. The global economy, MC, a lot of it is tied to China. So really after 2008, if China had not done that stimulus package with the massive amounts of central planning and stimulus, really trillions of dollars, they pulled forward decades of demand for copper, iron ore, a lot of the industrial commodities. If they had not pulled forward that demand after 2008, we wouldn't have had much of a real recovery, in my opinion. So China has pulled that forward a lot, but now that China is stalling and slowing down, I think, whether it's container ships or electricity usage out of China, there's a lot of evidence that the global economy is slowing down and stalling. There's a lot of problems in so many different countries. I mean, I think personally the global economy is an economic minefield. A lot of it has to do with debt problems. There's literally trillions of dollars all over the globe that's misallocated. A lot of it's from bad central planning from central bankers, from politicians, from large investment bankers who knew that they had too big to fail banks, large corporations that had been borrowing to buy back their stock instead of making prudent long-term investments so the corporate executive could, get his stock option bonus kicked in. So when I hear the people on TV, when I hear these academic PhD economists go and give a speech on TV, or I read their white papers, or I hear the talking heads on CNBC and Bloomberg, they talk about deflation nonstop. But I live in the United States and my bills keep going up a lot. So I think it's more really that a lot of people in power scream about deflation so they can keep tinkering with the economy. Governments aren't really going to allow real deflation for a long period of time without coming up with new ways to create more inflation, because governments cannot tax deflation. So they really will not allow real meaningful deflation, which is bankruptcies, debt destruction, gain in purchasing power in currencies. They're really not going to allow that. Now, obviously, there's going to be some deflation or free market forces in consumer discretionary items because the consumer in the U.S. can't afford it. So I would say the U.S. is stuck in stagflation right now. I am cautiously optimistic that Trump, in spite of, I didn't vote for Trump, but I was hoping he would win the election more than Hillary Clinton, because I think, Hillary Clinton's basically the Antichrist. But, Trump has a lot of flaws, but I think Trump is a good businessman. He is putting people in the cabinet, at least some of them, that could potentially fix some of the trade deals and cut taxes and red tape and other regulations for small business and entrepreneurship in the U.S. to maybe start making more investments and create jobs. We just haven't seen the massive increases in the U.S. for investments into property, plant, and equipment, a lot of factories. In the past, couple decades, a lot of these trade deals that the U.S. had passed had meant jobs had left the U.S. So I expect that to stop. But, that's with tariffs and potentially really bad tariffs. And I think the tariffs are really dangerous, because if you study history, you go back and look at what the Smoot-Hawley tariff did after the 1929 stock market crash. Yes, the Smoot-Hawley Tariff Act didn't cause the Great Depression of 1929. The Federal Reserve and their credit boom did, and there was other problems. As well. But the Smoot-Hawley Tariff Act did make the Great Depression worse and did make it last even longer. So I'm worried that Trump, he is planning some type of supply side economic stimulus, which is very similar to what Ronald Reagan did. The difference between that and now is that in the 1980s, when Ronald Reagan took office, the U.S. had a lot less debt. The U.S. was a creditor nation. The U.S. is the largest debtor nation in history now. So, and yet we still see the dollar getting stronger. So it's kind of perverse. We have a lot of countercurrents, cross currents going on right now. It's very complicated. If Trump can actually clean up some of the rules, regulations, cut taxes on corporations and small business, and start creating jobs, I think his administration would be a success, at least in the economic part of it. I'm worried, though, about his foreign policy. So I think, it's going to be a complicated future for a lot of your listeners. It's not going to be as simple as it was a long time ago. Government is just so big at this point, MC. It's involved in so many different industries, so many rules and regulations, especially in the U.S., that people who call the U.S. Totally free market and capitalism, and blame capitalism for the problems that the U.S. has created, just don't understand how corrupt and how bureaucratic the U.S. has become.
You've spoken about the trouble that the European banks are in and the consequences of this developing European banking crisis. And we've seen that the Italian banks are in big trouble. And obviously there's a little bit of uncertainty now in the political arena with Renzi losing the Italian referendum and resigning. What is going on with European banks, and more specifically Italian banks? And also, speaking about The Walking Dead, what is going on with Deutsche Bank? Because I've personally thought that those troubles would have rippled a little bit through the banking system by now.
They definitely should have already. Look, with the globalists have wanted to keep the euro together for a very, very long time. I think what has been happening behind the scenes, and this is why the Italian banks and the European banks and Deutsche Bank have not failed yet. They're ultimately going to fail in some form. So either a part of the bank is going to be nationalized, it's going to be spun off, or the entire thing is going to be bailed out. The problem is the ECB is expanding their balance sheet. They are buying corporate bonds. They are buying sovereign debt. So they're doing a large QE program. They just don't have the resources to do as much of a bailout program as is required to bail out the derivatives books of Deutsche Bank and the Italian banks. So ultimately, and we saw this was revealed for truth after the 2008 crash. A lot of people in the financial industry aren't even aware of this, because I bring this up to non-libertarian, non-Austrian school types and ask them if they're even aware of this, and they tell me they have no idea. So Ron Paul got a one-time partial audit of the Federal Reserve. This is why, central banks, there needs to be transparency first, and then we need to start reducing the central banks, and then we need to eliminate them entirely. But during the 2008 crisis, MC, the Federal Reserve bailed out the global economy to over $19 trillion. So there was almost interest-free loans for large corporations like McDonald's and Harley-Davidson in the commercial paper market. There was bailouts for large investment banks. There was bailouts for central banks in countries that you wouldn't even think the U.S. would want to even bail out. And the U.S. gave over $10 trillion alone to the European Central Bank for bailouts in 2008. So the question then is, what's going to stop the central bankers from doing this again? What's going to stop? There's no transparency in these currency swaps. Okay, so when I watch TV and I listen to some of these other experts talk, they say the Federal Reserve's out of ammo, the ECB's out of ammo, the Bank of Japan's out of ammo. Maybe they're out of actually announcing a quantitative easing program in public, because that would anger the citizenship, right? Because that would be a overt way of a bailout. That would publicly announce a bailout, because if you publicly announce a bail-in or you publicly announce a bailout, the citizens are starting to wake up. They might not understand everything that's really going on, but they understand the term QE, they understand bailout, they understand bail-in. They can't get their money. The purchasing power of their money with QE is being stolen. It's being given to the preferential people in the government and the banks, or the large corporations are getting easy access to money and credit that they shouldn't have, so they can keep their high salaries or not get fired for bad investments. So I think, the quantitative easing program hasn't stopped. It's just, instead of being overt, it's just gone covert since 2008, more so than in the past. So they're still printing massive amounts of money. Their balance sheets aren't always showing this because, they're not allowing independent audits. So when the Federal Reserve says its balance sheet is $4 trillion, and by the way, in 2008, it went from $800 billion to $4 trillion now. So if the Federal Reserve would have came out in 2009, if Ben Bernanke would have came out then and said immediately that our balance sheet is going from $800 billion to over $4 trillion, and he would have announced that overnight we're doing all this money printing and credit creation and backdoor bailouts immediately, the dollar and the dollar index probably would have dropped a lot. The yields in the treasury market probably would have spiked. China and Saudi Arabia and so many other holders of treasuries would have probably started to quickly dump them. And yet, that's what's been done with these central banks have increased their balance sheets. The dollar and the dollar index is still very strong compared to what many Austrian school economists thought it was going to do. And so we have the situation now where the money is still being printed. Like I said, it's just covert instead of overt. And this is being done to try to prevent the citizenry, who is already mad because they know the economy is not as good as the government statistics, the politicians, the talking heads on TV are saying, because when they say how good the economy is, they can't find a full-time job. So I know a lot of people who have a couple part-time jobs, or they have a full-time job, they can still barely get by, and they have one or two part-time jobs and they're not sleeping. So there's going to be long-term ramifications for this in the future. I think the people in power, the elites, are willing to do anything to keep the game going as long as possible, to maintain the status quo, and to prevent the citizenry from charging, with the pitchforks. But there is lots of problems. Europe, besides the European banking crisis, Europe also has an immigration problem. There's been a ton of immigrants that have come in that European taxpayers cannot, number one, they can't afford it, and number two, is drastically changing European culture in many different countries. So if I was a European, I would be very upset at this, that I'm being taxed like crazy, and the people in power, even Brexit is being fought. Look, Brexit it may even be delayed. We have, all these elites in England and from Brussels talking about how they're going to fight it in court and delay, and it might not go through still, even though the people have demanded that's what's in the vote. Look at the games that the mainstream media and the Democrats and Hillary Clinton are still trying to play with Donald Trump. I just saw an article today from MarketWatch, which is supposedly credible, by the way. They're supposedly good at picking out fundamental analysis on dividend stocks and regular, stocks on the NASDAQ and the New York Stock Exchange. They ran an article today, the top 10 reasons why Donald Trump is a Russian spy.
It is amazing. I don't even. I mean, I don't even know what to say to that. It is so crazy. You mentioned Brexit too, and the thing is, instead of taking a step back and saying, whoa, people are really angry, not just in the United States, but in Brexit, all across Europe, many parts of the world. They look at their neighbors. Their own living standard has gone down. Their neighbors are out of a job. Their living standard has gone down. Communities have gotten poorer. They've been taxed, and regulated, and all those things. And and with all these free trade, quote unquote, agreements in the United States, especially, you look at all these cities and towns and communities that have just been devastated by it. So you're going to have some angry people, and it's bubbling to the surface globally, and it just amazes me that they then, instead of trying to understand what's going on and trying to use that or trying to address the problem, they're just pushing back.
Welcome to dystopia, man. I mean, this is crazy. The mainstream media. From doing my reading and research, the mainstream media was told in advance with lots of experts that there was a banking crisis and a housing crisis coming prior to 2008. They had Peter Schiff on occasionally, but he was mostly, just a clown to laugh at. They didn't have nearly the balanced coverage that they should have had to warn people. And the reason is because the mainstream media is not objective. They're not unbiased journalists. So they're beholden to their sponsors, which are the mutual fund companies that sell stock mutual funds and bond mutual funds that don't want any of their holders to panic sell. Their sponsors are also the banks. The banks are also on the board of directors of the media company. So anytime, like someone like Glenn Beck has in the past, he had G. Edward Griffin on, I think on Fox, on his show. As soon as he had G. Edward Griffin on, who wrote The Creature from Jekyll Island, he was fired.
Yeah.
So
full panic mode at that stage for him.
Yeah. So, but my point though with all of this is, look, the mainstream media lied about, the Iraq War, the reasons to get us into the Iraq War. They lied about the 2008 financial crisis. They could have easily given us the warning. There was lots of research there from a lot of people who were saying, the banks are in trouble here. The real estate market is just ridiculous. People have to protect themselves. The stock market was going to crash. And, they didn't have a lot of those people on. And then now look at their one-sided coverage of this latest election, where we know now with the WikiLeaks evidence how they sold out to Hillary Clinton. So people like you, people like me, we're going to have to do a service to the public here, because our research, we're going to have to try to provide better, balanced, objective coverage than and searching for the truth than the mainstream media is.
No, absolutely. And to your point, too, I mean, Peter Schiff, I just remember him going on, and he's the person you had mentioned earlier in the show, too, that when you found Peter Schiff and you looked into Austrian economics, that's kind of the road that I went down to as well, because when Peter was saying these things, and as you mentioned, they basically had him on the show because he was the clown of the show, right, the guy that everybody kind of picked on. And that really intrigued me, and I started following him and reading his books and his research, so I went down there, but to your point, it's just, we're going to have to do a very, very good job of presenting balanced just facts and evidence out there and try to inform as many people as possible and encourage them to keep reading widely, do their own research and form their own opinion because, in a world of universal deceit, telling the truth is a revolutionary act, right?
Exactly. And it's very tough to avoid confirmation bias and herd mentality. I love gold and silver, and it's difficult for me to read the contrarian opinion of people that are bearish on it. But I do occasionally read those pieces, and I don't put all my money into gold and silver. That's a mistake I've learned from in the past, where I had too much of my money invested in gold and silver at one point. When the 2008 crash hit, not only with my parents' inheritance money was I buying, regular stocks with my own money, I was also buying gold and silver shares, for pennies and copper stocks and things like that. I put too much of my money at that time into just gold and silver miners. I had 600% profits in some gold and silver miners. I took profits towards the top in 2011, but everyone makes mistakes. Warren Buffett makes mistakes. Even the best investors make mistakes. It's about learning from them. So I took a lot of profits. It's just when the stock started to correct, I started with my profits started averaging down again and buying back in. So I think with the rules changes going forward, it's going to be very tough for people to get good information from the mainstream media, unless you're buying a dividend stock or something like that. But, a lot of their other coverage is going to be just very biased. But, the world we live in now, it's going to be tough. For most people, I talked about confirmation bias and herd mentality, and you asked in one of your questions here about my reading list. I actually, besides reading lots of books about entrepreneurship and business and different investing styles like Warren Buffett, Benjamin Graham, Peter Lynch, Sir John Templeton is one of my favorite investors of all time. I also read a lot of books about leadership, emotional intelligence, psychology, and how the brain works. So I try to keep more of an open mind, even though I've read so many books. I don't think I'm a know-it-all. I more think that my glass is half full and that I enjoy learning, and there's always something new to learn and always something new to challenge my beliefs about a certain industry or certain technology. So, dealing with markets, no matter how smart you are or what your past track record was, the market can always humble you. So I think, for your listeners out there, I'm a history guy. Like I said, one thing I would like to see more of is for people to actually go back and read from financial history. So read Thomas Woods, Murray Rothbard, Niall Ferguson, Paul Johnson. Read some of those great books about financial history and the past, because the past isn't going to repeat exactly, but we are going to learn lessons from it. So, going forward, we're not going to see an exact repeat, say, of the October 1929 crash or FDR's and his other New Dealers, which were, by the way, the New Deal was a total failure. Read the Politically Incorrect Guide to the Great Depression and the New Deal by Austrian school economist Robert Murphy, or read Murray Rothbard's book about the Great Depression. But read some of those books and challenge your beliefs, because I have a history degree, and what I was taught in school about history, in a lot of cases, unfortunately, was just not correct. I also like learning about biography. So I especially like learning about people who had to overcome a lot of adversity in their life. Steve Jobs, Albert Einstein. I've read a book about Genghis Khan. So I like interesting people and learning about that. For your listeners out there, one of the best investments they can make, even if they don't have a lot of money and can't afford to go buy, rental properties and a bunch of different stocks and a lot of physical precious metals, and have a diversified portfolio of assets and invest in startups and things like that, is they should get an Audible audiobook subscription. So in addition to listening to your podcast and my podcast, they should go get an Audible audiobook subscription, because they can consume more books that way. They can, if they think they need to reread a book, they can listen to the book again. I like, as a historian, I like Robert Greene. He takes important historical figures, he reads their biographies, and he combines them into important lessons about things. So he's written books like the best-selling books like The 48 Laws of Power, Mastery, The Art of Seduction, An Indispensable Primer on the Ultimate Form of Power, 33 Strategies of War, and a book by 50 Cent the Rapper, how he overcame poverty to become a best-selling best-selling music artist. So, I've read a bunch of different biographies. I have a lot of different types of books in my Audible collection right now, whether it's a biography by Ice Cube, the rapper, or others. And, that's how you begin to really understand how the world works, is by looking at different people's points of view.
Fantastic advice, and yeah, I would highly recommend that too with Audible. I mean, you can turn any environment into a classroom. If you're driving, if you're traveling, if you're in the gym, if you're walking, I mean, it's fantastic advice. Jason, one habit that I've observed from wealthy and successful people is that they're always studying new subjects and learning new skill sets. What are you looking at right now? What are you studying, and what skill sets are you currently learning?
Well, I've had to learn marketing more. I actually didn't know anything about marketing at all, other than, writing investing articles. I was an investment analyst too at a paid newsletter company in the past while I was building my business. So, I was just a good investment analyst, a good stock picker, but I've had to learn a lot about marketing. We're still learning a lot. It's a work in progress. I think the other skills that the things that people need to realize is, if you're going to be a good entrepreneur, you don't need to have all the skills. You need to have a good partner that either complements your skills or has capital, or is willing or has the passion maybe to learn the skills necessary, or can go out and raise the money. But they have to be careful about who they partner with. So, I mean, you can have someone apprentice maybe as an unpaid intern, or you can pay them part-time in order to work with you. You can pay them for their specific skill set. But I don't think people need to go and learn to master every single skill. You only need to be successful, I think, you only need to master a few skills. And then you need to find good partners who you can actually trust and work with. I've had problems in the past, MC. Like I said, this has been a long and difficult journey for me. I had a rough childhood growing up. My family had money, but I had a lot of other problems with friends, and I was bullied a lot growing up too. I had to overcome that. So I had social anxiety disorder and a lot of other problems. I actually am surprised I could do any of these interviews and speeches. I actually used to stutter a lot when I was talking to people for most of my young childhood. So in order for me to be able to talk like this, it's taken me many years of overcoming my fears and rejection just to get to this point. But for advice for people out there and learning to deal with failure and adding skills, I think, if before you pick out a partner, especially if there's a lot of money involved, background check, credit check, maybe even hire a private investigator for $500. I have a lot of friends who have made big investments into either real estate deals or startups. And, they've done deals with people who have been on like technology magazine covers and still gotten screwed over in deals. So, doing due diligence on the person's track record is difficult, and making sure they won't screw you. But, in this society right now, it's litigious, and not everyone's going to do what they say anymore. So people just have to be very careful about that, you can trust someone to a point, but once you get involved with them with a business deal, signing I've walked away from at least 3 contracts of $60,000 a year or more to do paid newsletters for other people, because after negotiations over the phone for weeks, emails, conference calls, etc., that stuff was snuck into the contract in different versions at the end, right when I was about ready to sign it, and that were basically like, oh, you're handing over 50% of Wall Street for Main Street's equity and future business to us in exchange for this paid newsletter writer opportunity. That stuff that was just snuck in. So definitely have a lawyer look at it. 1 or 2 lawyer friends look at it. If you're not a lawyer, definitely reread the contract multiple times, because we're just in a society where I'm not saying everyone's bad like this, but there are people out there, at least a certain percentage, who are going to try to take advantage of you and steal from you. Even if you have a good idea. So be very careful about that. I think that's the best advice I can provide to people is be skeptical, but listen.
Fantastic advice. Now, Jason, a core message in our show is to leave our families, communities, and a world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So if you cannot pass on any money to future generations, and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
Okay, so I've read this great book. It's really short. I recommend your listeners read it. It's called The Four Agreements. A lot of successful people in this world, business people, other successful people have read it. And the four agreements are: be pristine with your word, don't take anything personally, don't make assumptions, and always do your best. And if you can live your life by those, these four agreements sound really simple. It's old Toltec wisdom. They sound really simple. It's a really short book, but it's a lot easier said than done. Especially the certain ones are more difficult for certain people than others. For example, the assumptions one is more difficult for me. I think, our brains, in order for survival skills, our brains make certain key assumptions about a lot of different small little things in order for us to survive. So whether that's with dating someone or interactions with other people or, just walking into a convenience store and seeing three people hooded with sunglasses on near the counter. It doesn't matter what color skin they are, they're near the counter and they're acting funny. You're in a weird situation there. You maybe leave the convenience store or leave the gas station or something like that. So, our brain makes assumptions like that, and we have to be careful about making certain assumptions. There's a fifth agreement. It's a new book out, and it summarizes the other four, and it says be skeptical, but listen to other people's opinions so you don't suffer from confirmation bias or herd mentality. So you're open to other perspectives about seeing the world. And I think that's a key thing with history is, whether you have a college degree in history or you're just a fan of history, enjoy reading history books, a lot of times history is written by the winner of a war or the winner of a regime. The losers, the people that get killed or have, violence brought upon them or imprisoned, they don't get much of a say in things. Maybe later on they get a small little book and a few people like me will actually read it. But, that's still the truth. So, it's about whether or not you want to pursue the truth. But the future going forward, people are going to have to choose themselves. The old days, many decades ago in the United States, you could have one job for the most of your life. The company wasn't going to fire you. As long as you did mostly a good job, you could get paid on the job training. Even the financial industry, decades ago, I was speaking with this old stockbroker type when I worked at my job as an investment analyst, and he was telling me how much the investing in the financial industry had changed. He was paid coming out of college in the late 70s, early 80s. He was paid on the job training to read investing books and learn how to help his clients pick out winning stocks. All that stuff is gone. So, people are going to have to keep the mentality that they're going to have to hustle in a good way, be more entrepreneurial to create either investments generating cash flow for them or a side business. They're going to have to choose themselves and learn to want to keep adding skills because the odds of having a successful career and staying at a job for a long period of time now going forward are low. There's going to be a lot of cases where it won't even be the employee's fault now that, you lose your job. I've heard of lawyers now in the DC metro area where there's way too many lawyers around here. There's lawyers, running every single government agency, that have no experience in any of the government agencies they're running, which is just ridiculous. But, there's lawyers at private law firms here. They're making too much money now, and the partnership is asking them to cut back because times are tough. So you can be fired for, you were the last person hired. There's so many excuses now for a corporation to fire you. The sad part is when a corporation actually fires employees nowadays, the stock price goes up. So there's a perverse incentive now for them to fire employees. And normally when large corporations make long-term investments that don't make immediate cash flows, even though in the long term that's a good thing for the company, that it could create a new product or service, make the economy better, the new product could potentially improve people's lives a lot, that means the stock price goes down. So a lot of these myopic, short-term, rent-seeking CEOs who are not long-term oriented, they're hesitant to make these investments anymore. So people are going to have to, it's going to be a very difficult situation going forward for people to survive and thrive. The old ways of making a successful career as an employee of not having a diversified investment portfolio, and I'm not talking about a bond funds and stock funds as diversified. I'm talking about, maybe owning a chunk here of a chunk of your, if you have at least a couple $100,000, a chunk in rental property, a chunk in physical precious metals and gold and silver companies, a chunk in maybe some hand-picked stocks that can grow free cash flow, a chunk in maybe some startups or maybe your own business, and a chunk in cash. Even cash is dangerous now, man. The stuff that is coming out with these PhD economists and them talking about negative interest rates and cashless society, what they've done in India, and how branches of Australian Citibank are eliminating cash, and how we have these books out from academic Keynesian PhD economists like Ken Rogoff talking about, they want to ban the $100 bill, the $20 bill. So it's going to be a lot tougher than it was when our parents were growing up in order to be financially independent and be comfortable. We have a lot of Americans. The statistics are very obvious if you Google search this. Most Americans now, unfortunately, barely even have $1,000, if that, in their checking account. I think 60% of the United States doesn't even have $1,000 in their checking account. Most Americans are living paycheck to paycheck. Half the country doesn't even pay taxes, really. When I talk with my friends who manage, a couple $100 million assets under management or more, money managers, they tell me there's couples that want to retire in 10 years and they've only saved $100,000. So I don't know how you can retire in 10 years if you're close to retirement and you only have $100,000. You have a lot of work to do. You haven't done something right for a long time. You're going to have to change a lot of your habits. You're going to have to figure out ways to boost your income. So it's going to be very difficult. And, the people that have $100,000 are going to these money managers. They're being turned away because not only do they want the money managers to grow their $100,000 to millions of dollars in 10 years or less, they also want them to produce income every single year for them, grow income, and also not lose any money. So, that's like turning water into wine. Those type of expectations it's alchemy. You cannot do that. As a money manager, without taking mass amounts of risk and potentially blowing up that capital and losing lots of money, you cannot take that type of investment risk. So there's going to be a lot of sacred cows that are going to be killed going forward. It's going to be difficult for most people, but you creating your program and trying to figure out and help people generate cash flow, whether it's creating a new business or creating new investments, that's the right idea. People need to work on the right side of the cash flow quadrant. As Robert Kiyosaki of Rich Dad, Poor Dad would say, they need to be either business or investor mentality. They need to focus on the right side of the cash flow quadrant because, just making a lot of money as an employee or a sole proprietor type of job, those jobs are going to be dangerous going forward.
And that's the purpose of this podcast too, is creating income streams across asset classes, because the only financial security that you're going to have in this new economy, in the information age, is having multiple streams of income every single month. You were mentioning just of how all the lawyers, it doesn't matter what job you're in, but even if you're a lawyer, their jobs are in jeopardy. Just look at these smart contracts coming out now on blockchain technology.
Yep.
So every single industry that you're in, and many of them, the jobs are already gone. We just don't know it yet. You're going to have to empower yourself, as Jason was saying, and you're going to have to become a student, a lifelong learner, and keep updating your skills and your skill sets and improve upon existing ones to provide value and serve others in this new economy. Now, Jason, how can my audience learn more about you and your company, your podcast, and keep informed of all of the projects that you're involved with?
Sure. On our YouTube channel, which we have over 13,000 subscribers now and almost 2.4 million views, they can just type in Wall Street for Main Street, WLLSTFORMAINST. They can go to the wallstreetformainstreet.com website and sign up. We're going to start writing our 2016 review, 2017 preview. There will be a review of many different markets in there from 2016, along with a preview of different markets. We will have some well-researched stock investments and stock trades there. I don't think people should only own stocks, but I did start off as a stock-only investor before I was ever buying any physical silver or gold and silver mining stocks. I was a value investor in picking out winning stocks in investing articles. So I think there's still, even though the stock market is at an all-time high, and we may be in a potential crack-a-boom phase, there is still going to be value there if you know where to look. They're just not going to be as easier to find. I wouldn't buy the Dow or the S&P unless you're a trader and you're hedging it out. If you're a long-term investor, I wouldn't touch that right now, especially when utility stocks, which have no growth, are selling for over 20 times earnings. But yeah, so the rest of us, we're also on iTunes. I would like to someday have 100 5-star iTunes reviews like you. So if our listeners follow our podcasts on there, maybe they could go listen. If they're not familiar with our podcasts, they can take the link and listen to them on iTunes as well.
Fantastic. Well, Jason, it's been a blast having you on and a fantastic experience. Thank you for coming on the show and just sharing your journey and your knowledge and providing so much value for my listeners.
You're welcome. My pleasure. Let's do it again sometime.
Hi, this is MC Laubscher, the host of the Cash Flow Ninja podcast. As you may know, I'm also the president and chief wealth strategist of Valhalla Wealth Financial. We help individuals, families, small businesses, entrepreneurs, and professionals build their wealth outside of Wall Street and help investors maximize the use of every dollar in their personal economy and boost their investment gains. We do this by combining their capital and investments with the financial vehicle of the wealthy, according to the infinite banking concept. If you are interested in learning more, you can email me at info@cashflowninja.com and I will send you a copy of Nelson Nash's book, Becoming Your Own Banker. Thank you for joining me and my guest, Jason Burack, on the Cash Flow Ninja podcast today. If you like what you hear and appreciate what we're trying to build here at the Cash Flow Ninja, please subscribe, rate, and review our show on iTunes and share our show with family, friends, in your network. I really have been humbled by your support and feedback, and if there's any way that I can provide more value to you and serve you better, please reach out to me at info@cashflowninja.com. And don't forget to take advantage of the offers from our partners that aims to empower you to be healthy, wealthy, and wise. Our healthy partner Onnit provides supplements, nutrient-dense, and earth-grown foods and fitness equipment to help you achieve your next level of well-being and total human optimization. Our listeners can get a 10% discount with coupon code GETONIT at cashflowninjahealth.com. Our wealthy partner Fundrise gives everyone the opportunity to invest directly in high-quality real estate without the middleman. Fundrise makes the process of investing in the highest quality commercial real estate from around the country simple, efficient, and transparent. You can get started with as little as $1,000 and do not have to be an accredited investor to participate in some of their offerings. You can check them out at cashflowninjawealth.com. And don't forget our wise partner, Audible. You can download any audiobook for free. When you try Audible for 30 days, you can get your free audiobook download at cashflowninjabook.com. That's our show for today, everyone. Until next time, live a life of passion and purpose on your terms.
You have been listening to the Cash Flow Ninja with your host, MC Laubscher, the podcast empowering and inspiring people to discover how to generate their own income and manage, grow, and protect their own wealth in the new economy. Today's show notes and resources are available on our website, cashflowninja.com. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objective, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.